Why are stock exchanges afraid of these people? Not because these people are rich, not because they have expensive suits, not because they sit in tall buildings, not because they shout at screens all day. No. Stock exchanges are afraid of a different kind of person. A calm person. A patient person. A person who can read the game. A person who does not panic when the market shakes. A person who does not run after every shiny stock. A person who understands one simple truth. The market is not only a place where money moves, it is a place where emotions are tested. And the person who controls emotion has power. That is why these people are dangerous. Not dangerous in a bad way. Dangerous to the system that feeds on fear. Dangerous to the noise. Dangerous to the traps. Dangerous to the people who want small investors to stay confused. Because when a person becomes calm, educated, and disciplined, the market cannot push them around so easily anymore. Today, we are going to talk about these people. The people stock exchanges do not really want to meet. The people who stop gambling and start thinking. The people who stop chasing and start waiting. The people who stop reacting and start planning. The people who understand that the market does not reward the loudest person. It rewards the person who survives. Now, let's be clear. A stock exchange is not a monster. It is a marketplace. A place where buyers and sellers meet. A place where companies raise money. A place where investors can buy and sell shares. But around that marketplace, there is a whole world. Brokers, news channels, analysts, influencers, trading platforms, big funds, small traders, fear, greed, rumors, hope, and in the middle of all that noise, there is one small person sitting at home, looking at a screen, thinking, maybe I can make money today. That person is usually easy to control. Why? Because that person is emotional. They buy when they are excited. They sell when they are scared. They listen to rumors. They chase green candles. They panic during red days. They believe every headline. They think the market owes them money. And when people behave like that, the market eats them alive. Slowly, quietly, again and again. But there is another kind of person. This person does not rush. This person does not believe every story. This person does not buy just because a stock is going up. This person does not sell just because everyone is crying. This person asks questions. Why is this stock moving? Who benefits from this news? Is this company actually strong? Is the price too high? What is my risk? What is my plan? What happens if I am wrong? That last question is very important. What happens if I am wrong? Most people do not ask that question. They only ask, how much can I make? But strong investors ask, how much can I lose? That is the first reason stock exchanges fear these people. They think about risk, not only profit. Profit is beautiful. Profit is exciting. Profit makes people dream. But risk is real. Risk is the thing that stands behind every dream and waits. A weak trader sees a stock going up and says, I need to buy now. A strong investor sees the same stock and says, why is it going up? Is the move real? Am I late? What is the risk? That difference looks small, but it changes everything because the market loves impatient people. The market loves people who need action every day. The market loves people who cannot sit still. The market loves people who think doing nothing means missing out. But the disciplined person understands something powerful. Doing nothing is also a decision. Waiting is also a skill. Not buying is also a trade. Sometimes the best move is no move. And this drives the market crazy because the market wants you to move. Every click creates activity. Every trade creates fees. Every emotional decision creates opportunity for someone else. But a patient person does not give the market easy money. They wait. They study. They watch. They choose carefully. And when they move with a reason. Now, imagine two people. The first person opens a trading app in the morning. They see one stock rising fast. They feel excited. They think, everyone is making money. I need to buy now. They buy. 5 minutes later, the stock drops. They panic. They sell. Then the stock rises again. They feel angry. They buy again. Then it drops again. By the end of the day, they are tired, confused, and poorer. Now look at the second person. They open the same app. They see the same stock rising. But they do not rush. They check the news. They check the chart. They check the volume. They check the company. They ask, is this a real move or just noise? If the answer is unclear, they do nothing. They close the app. They go drink coffee. That person looks boring, but boring is powerful because boring people often survive. And in the stock market, survival is not small. Survival is everything. Many beginners want fast money. They want quick wins. They want one big trade to change their life. But the market is not a gift machine. It is a test of patience, a test of discipline, a test of emotional control, a test of whether you can follow a plan when your heart wants to run. The market will make you feel smart. Then it will humble you. It will give you profit. Then it will take it back. It will show you a beautiful opportunity. Then it will show you how little you actually understand. That is why the people stock exchanges fear are not the people who win once. They are the people who keep learning after they lose. They are the people who do not break after one bad trade. They are the people who write down mistakes. They are the people who study patterns. They are the people who accept that the market is bigger than their ego. Ego is expensive, very expensive. In the market, ego can destroy months of work in one afternoon. A person says, I cannot be wrong. Then they hold a losing position too long. A person says, this stock must go back up. Then they watch it fall deeper. A person says, I know better than everyone. Then the market teaches them a painful lesson. The market does not care about your opinion. It does not care about your hope. It does not care about your pride. It does not care that you need money. It does not care that you were right yesterday. Today is today. And the price is the price. The dangerous investor understands this. They do not fight the market with ego. They respect it. They know they can be wrong. They prepare for being wrong. They use stop losses. They manage position size. They do not put all their money into one idea. They do not turn one trade into their whole identity. This is why they are difficult to defeat, because you cannot easily destroy a person who already planned for failure. Most people only plan for success. They imagine the profit. They imagine the new car. They imagine the vacation. They imagine telling friends, I knew it. But disciplined investors imagine both sides. If I win, what do I do? If I lose, what do I do? If the price goes sideways, what do I do? If the news changes, what do I do? If the market crashes, what do I do? They do not wait until the storm comes to build a roof. They build before the storm. If this kind of content helps you understand money, markets, and investor psychology, subscribe to the channel now. Hit the subscribe button. Turn on the notification bell. Stay with us. Learn slowly. Think clearly. Do not just watch. Do not just scroll. Use what you learn. Because in the market, one clear idea can save you from one expensive mistake. Now, let's go deeper. Why would a stock exchange fear educated investors? Because educated investors ask better questions. And questions are dangerous. Confused people are easy to move. Educated people are harder. A confused person hears, "This stock is the next big thing," and they buy. An educated person asks, "Why?" A confused person hears, "Everyone is buying," and they follow. An educated person asks, "Who is selling to them?" A confused person sees a big drop and panics. An educated person asks, "Is the business broken or is the price just falling?" A confused person looks for hot tips. An educated person looks for process. That word matters. Process. A process is something you can repeat. A process is not luck. A process is not emotion. A process is not one lucky trade. A process is a way of thinking. Before buying, they check. Before selling, they check. Before risking money, they check. They have rules. Rules sound boring, but rules protect people. A beginner may say, "I feel this stock will go up." A disciplined investor says, "Feeling is not enough." Feeling is not a strategy. Hope is not a strategy. A comment on the internet is not a strategy. A random chart line is not a strategy. A real strategy has rules. When do I enter? Why do I enter? How much do I risk? When do I exit? What will prove me wrong? What will prove me right? How many times have I tested this idea? This is why most people lose. Not because they are stupid. Many are smart, but they are undisciplined. And in the market, an undisciplined smart person can lose faster than a simple person with rules. That is painful, but true. The market does not reward intelligence alone. It rewards behavior. You can know many things and still lose if you cannot control yourself. You can read books and still lose if you overtrade. You can understand charts and still lose if you revenge trade. You can follow financial news and still lose if you panic. Information is not enough. Discipline turns information into power. Now, what is revenge trading? Revenge trading is when you lose money and then try to win it back quickly. You feel angry. You feel embarrassed. You feel attacked, so you enter another trade. Not because it is a good trade, because you want revenge. But the market is not a person. You cannot punish it. You cannot scare it. You cannot shout at it. The market simply moves. And if you trade from anger, you usually make the wound bigger. A dangerous investor knows when to stop. They can lose money and still walk away. That is strength, not weakness. Weak people keep pressing buttons because they cannot accept pain. Strong people close the screen and protect their capital. Capital means your money. But capital is more than money. Capital is also your mind, your patience, your energy, your confidence, your ability to return tomorrow. If one bad day destroys your mind, then you did not only lose money, you lost stability. That is why disciplined investors protect both. their account, and their psychology. Now, let's talk about fear. Fear is everywhere in the market. Fear of losing, fear of missing out, fear of being wrong, fear of being late, fear of selling too early, fear of buying too high, fear of watching others make money while you sit still. That last one is powerful. It is called FOMO, fear of missing out. FOMO makes people stupid. Yes, stupid. And I do not say that to insult people. I say it because it is true. FOMO takes normal people and turns them into button-clicking machines. They see a stock rise. They do not know the company. They do not know the reason. They do not know the risk. But they buy because they cannot stand watching others win. That is not investing. That is emotional chasing. And the market loves emotional chasing. Because when you chase, you usually arrive late. You buy from someone who entered earlier. You become the exit door for someone else. That is a hard sentence, but you need to hear it. Sometimes when you are buying with excitement, someone else is selling with relief. You think you are entering an opportunity. They know they are leaving one. This is why patience matters. A disciplined investor does not need every move. They do not need to catch every stock. They do not need to be in every trend. They know there will always be another opportunity. Not today? Fine. Not this stock? Fine. Not this week? Fine. They are not desperate. And a non-desperate investor is dangerous because desperate people make bad deals. Calm people wait for better ones. Now, let's talk about news. News can be useful, but news can also be a trap. A headline can make you excited. A headline can make you scared. A headline can make you feel like you must act now. But by the time the news reaches everyone, smart money may have already moved. This does not mean all news is fake. No, it means news is not a plan. A news headline is information. You still need judgment. You still need context. You still need a process. The beginner says, "The news is good, I should buy." The disciplined investor says, "Is the good news already priced in?" That is a very important idea. Priced in. It means the market may already expect the good news. So when the news finally comes out, the price may not rise. It may even fall. And beginners feel confused. They say, "But the news was good. Why did the stock go down?" Because the market is not only reacting to news, it is reacting to expectations. This is why the market can feel unfair. A company reports good numbers and the stock falls. A company reports bad numbers and the stock rises. Why? Because the market compares reality with expectation. If people expected amazing results and the company gives only good results, the stock may fall. If people expected terrible results and the company gives only bad but not terrible results, the stock may rise. This is not easy for beginners, but dangerous investors understand it. They do not only ask, "Is the news good?" They ask, "What did the market expect?" That question separates amateurs from serious investors. Now, let's talk about the people who really scare the system. Long-term thinkers. The market loves short attention. It loves people who jump in and out. It loves people who change their mind every hour. It loves people who need excitement. But long-term thinkers are different. They study businesses. They look at cash flow. They look at debt. They look at management. They look at competition. They look at value. They look at time. They ask, Can this company become stronger over the next 5 or 10 years? This kind of person does not panic every time the price moves down. They know the difference between price and value. Price is what the market shows today. Value is what the business may be worth. Sometimes price moves faster than value. Sometimes price falls even when the business is still strong. Sometimes price rises even when the business is weak. Price is loud. Value is quieter. Weak investors listen only to price. Strong investors study value. This is why they are hard to shake out. A market drop scares emotional people, but it may attract prepared people. When prices fall, some people scream. Others make a list. They say, "What strong companies are now cheaper?" That is a different mindset. One person sees fire. Another person sees a sale. But be careful. Not every falling stock is a bargain. Sometimes a falling stock is falling for a good reason. A cheap stock can become cheaper. A broken company can stay broken. A low price does not automatically mean value. That is why serious investors do research. They do not just buy because something is down. They ask, is the business still strong? Again, questions. Questions protect you. Now, let's talk about traders. Not everyone is a long-term investor. Some people trade short-term. That can be fine. But short-term trading requires even more discipline because short-term charts move fast. Emotions move faster. A short-term trader without rules is like a driver without brakes. Maybe they move fast, but they are not safe. The dangerous short-term trader has rules. They know their setup. They wait for it. They do not force trades. They accept small losses. They protect capital. They track results. They do not treat the market like a casino. That last part matters. The market can become a casino if your behavior is gambling. Same screen, different mindset. An investor opens the app with a plan. A gambler opens the app with hunger. An investor asks, "Where is the edge?" A gambler asks, "What can make me money fast?" An investor accepts that losing is part of the game. A gambler thinks the next win will fix everything. Do you see the difference? The exchange does not need to fear gamblers. Gamblers destroy themselves. But disciplined traders, patient investors, educated people, people who learn from mistakes, people who stop being addicted to action, those people are different. They become hard to feed on. Now, let's talk about data. A serious market participant keeps records. This sounds boring, but it is powerful. They write down trades. Why did I buy? Why did I sell? What was my risk? What did I feel? Did I follow my rules? What mistake did I make? What can I improve? Most people do not do this. They lose money, feel bad, and move on. Then they repeat the same mistake. Again, and again, and again. A trading journal is like a mirror. It shows you who you are in the market, not who you pretend to be. You may think you are patient, but your journal shows you enter too early. You may think you manage risk, but your journal shows your losing trades are too big. You may think you follow rules, but your journal shows you break rules when you are excited. That is uncomfortable, but it is useful. A person who can face their own data can improve. A person who refuses to look at mistakes stays trapped. This is why the market fears people who record and review, because they stop being random. They become sharper. Now, let's talk about the crowd. The crowd can be dangerous. When everyone is excited, prices can go too high. When everyone is afraid, prices can fall too low. The crowd has emotion. A disciplined investor studies the crowd. They do not blindly join it. They ask, is everyone too optimistic? They ask, is everyone too scared? They ask, am I thinking clearly? Or am I just copying the mood around me? This is difficult because humans want to belong. When everyone is buying, it feels lonely not to buy. When everyone is selling, it feels scary to hold. When everyone is laughing at caution, caution feels stupid. But later, caution often looks wise. Markets move in cycles. Excitement, overconfidence, fear, panique, recovery, hope, excitement again. The names change. The stocks change. The technology changes. But human emotion stays similar. Greed still looks like greed. Fear still looks like fear. Hope still lies beautifully. And panic still makes people sell at the worst time. This is why history matters. A person who studies market history sees patterns. They know bubbles happen. They know crashes happen. They know manias happen. They know recoveries happen. They know no emotion lasts forever. This gives them calm. Not perfect calm, but enough calm to think. And thinking is a weapon. Now, let's talk about the most dangerous type of investor. The investor who knows themselves, not the market, themselves. Because you can study charts, you can read reports, you can follow earnings, you can watch economic data. But if you do not understand yourself, you are still dangerous to your own account. Do you panic easily? Do you get greedy after one win? Do you revenge trade? Do you copy other people? Do you take too much risk when you feel confident? Do you freeze when you are wrong? Do you lie to yourself? These questions matter. The market reveals character. It shows your impatience. It shows your fear. It shows your greed. It shows your ego. It shows your laziness. It shows your need to be right. This is painful, but also valuable. Because if you can learn who you are in the market, you can build rules that protect you from yourself. If you know you panic, reduce position size. If you know you overtrade, set a daily limit. If you know you chase, wait for confirmation. If you know you become arrogant after wins, take a break. If you know you cannot handle fast charts, do not trade fast charts. This is not weakness. This is wisdom. A strong person does not pretend to have no weaknesses. A strong person builds systems around them. Now, let's talk about manipulation. This word is used too much. Many people lose money and say the market is manipulated. Sometimes markets can be unfair. Sometimes big players have advantages. Sometimes information moves unevenly. Sometimes price action looks strange. But if you blame everything on manipulation, you stop learning. That is dangerous. Because even if the game is not perfectly fair, you still need better behavior. You still need risk management. You still need patience. You still need rules. You still need education. Blaming the market may protect your ego, but it does not protect your money. A dangerous investor does not waste all day crying. They ask, what can I control? Can I control the market? No. Can I control news? No. Can I control big institutions? No. Can I control tomorrow's price? No. Can I control my risk? Yes. Can I control my entry? Yes. Can I control my position size? Yes. Can I control my research? Yes. Can I control my reaction? With practice, yes. Focus there. The people who focus on what they can control become stronger. The people who only complain become stuck. And let me say this clearly. The market does not care about excuses. It does not care that you were tired. It does not care that someone gave you a bad tip. It does not care that you believed a rumor. It does not care that you wanted money fast. The market gives feedback through price. And sometimes that feedback is painful. But if you listen, you can learn. Now, let's talk about patience again. Because patience sounds simple, but it is rare. Most people cannot wait. They want results now. They want the stock to move now. They want profit now. They want confirmation now. They want success now. But markets do not move on your schedule. A strong setup may take weeks. A good investment may take years. A lesson may take many mistakes. If you need everything quickly, you become easy to control. But if you can wait, you become dangerous. Patience allows you to choose. Patience allows you to ignore noise. Patience allows you to buy when others are emotional. Patience allows you to sell when your plan says sell, not when your fear says run. Patience is not weakness. Patience is power under control. Now, let's talk about cash. People underestimate cash. They think cash means doing nothing, but cash gives freedom. Cash gives patience. Cash gives opportunity. If all your money is already in the market, you cannot act when opportunity comes. If you are overexposed, every red day feels like a threat. But if you keep some cash, you can breathe. You can wait. You can buy when prices become attractive. You can survive when the market becomes ugly. Cash is not always cowardice. Sometimes cash is strategy. Again, boring, but powerful. Now, let's talk about the people stock exchanges truly fear. They are not superhuman. They are not always rich. They do not always have degrees in finance. They do not always work on Wall Street. Some of them are ordinary people. A teacher, a nurse, a small business owner, a retired worker, a young employee, a parent, a person sitting at a kitchen table after work. But they do something most people do not do. They take the market seriously. They do not treat it like a game. They learn vocabulary. They understand risk. They build rules. They keep records. They stay patient. They protect capital. They do not worship money. They respect it. They know money earned slowly can disappear quickly if handled stupidly. They know one bad decision can damage years of saving. So they do not play around. They approach the market with humility. Humility means they know. They do not know everything. That is powerful. The beginner says, I know what will happen. The professional says, I know what I will do if different things happen. That is a big difference. Nobody knows the future perfectly. But you can prepare, you can build scenarios. You can plan. If price goes up, I do this. If price goes down, I do this. If price does nothing, I do this. If the news changes, I do this. If I feel emotional, I step away. This is how serious people think. Now, let's talk about noise. Noise is everywhere. Every day there is a new opinion. Buy this. Sell that. Crash coming. Bull market coming. This stock will explode. This sector is dead. This is the next revolution. This is the end of everything. If you listen to all of it, your mind becomes a crowded room. Too many voices, too many fears, too many hopes, too many opinions. A disciplined investor filters noise. They choose sources carefully. They do not let every headline enter their mind. They know mental space is valuable. You cannot think clearly if you feed your brain garbage all day. This is true in life, and it is true in investing. Protect your attention. Attention is money, because where your attention goes, your decisions follow. If your attention is controlled by panic, your decisions become panic. If your attention is controlled by hype, your decisions become hype. If your attention is controlled by process, your decisions become stronger. Now, let's talk about slow wealth. Slow wealth is not sexy. It does not make dramatic stories. It does not go viral. But slow wealth is real. Saving, investing, learning, compounding, managing risk, avoiding disaster, staying consistent. These things sound boring, but they build power. Fast money attracts weak minds. Slow wealth requires a strong one. Many people want one trade to change their life, but one bad trade can also change your life. Not in a good way. That is why the dangerous investor does not worship speed. They respect time. Time can be an enemy if you waste it. But time can be a friend if you use it well. Compounding needs time. Knowledge needs time. Confidence needs time. Skill needs time. Even emotional control needs time. You cannot become disciplined by watching one video. You become disciplined by practicing when it is hard, when the price moves against you, when your friend is bragging about profit, when the market is red, when the market is green, when you feel fear, when you feel greed. That is where discipline is built. Now, let's talk about the ending of the game. Not the market's ending. Your ending. What do you want from investing? Do you want excitement? Do you want attention? Do you want to feel smart? Do you want to prove people wrong? Or do you want freedom, security, more choices, a better future, peace of mind? Because if you do not know why you are investing, the market will give you a reason. And usually that reason will be emotional. People who invest for excitement overtrade. People who invest to prove something take stupid risks. People who invest from envy chase what others have. People who invest with a clear purpose behave differently. They know what they are protecting. Maybe they are protecting their family. Maybe they are building retirement. Maybe they are trying to escape debt. Maybe they want more freedom. Maybe they want to turn years of work into something that grows. That kind of purpose creates discipline. When you know what the money is for, you become less willing to gamble with it. A serious person does not risk rent money on a rumor. A serious person does not put family savings into a stock they do not understand. A serious person does not destroy long-term peace for short-term excitement. That is why these people are powerful. They are not just trying to make money. They are trying to protect a life. Now, let's create a simple picture. Imagine a person sitting alone at night. The market is closed. The noise is quiet. No flashing numbers. No green candles. No red candles. Just a notebook. They write, "What did I learn today? What mistake did I make? What rule did I follow? What rule did I break? What will I do better tomorrow?" This person is not famous. Nobody claps for them. Nobody sees the work. But something important is happening. They are becoming dangerous, not to people, to chaos, to fear, to bad habits, to the old version of themselves. That is the real transformation. The market does not only change your money, it can change you. If you let it teach you, it can teach patience. It can teach humility. It can teach risk. It can teach emotional control. It can teach you how expensive laziness is. It can teach you how dangerous greed is. It can teach you that hope without a plan is weak. It can teach you that discipline is freedom, but only if you listen. Most people do not listen. They just want profit. They want the reward without the lesson. And that is why they keep losing. The market is full of people who want money. It is not full of people who want mastery. There is a difference. Money can come and go. Mastery stays with you. A person with mastery can recover. A person with only luck cannot. Now, let's talk about what these dangerous people do every day. They study a little. They review mistakes. They follow risk rules. They do not chase every trend. They understand that missing a trade is not death. They accept losses quickly. They let winners breathe when their plan allows it. They do not argue with price. They do not marry a stock. They do not worship a CEO. They do not believe every prediction. They do not need to be right every time. They only need to protect themselves long enough to let good decisions work. This is a mature way to think, and maturity is rare in markets. Many people enter the market like children entering a candy store. They want everything. They touch everything. They cannot wait. They eat too much. Then they feel sick. A mature investor walks in with a list. They know what they want. They know what they will avoid. They know how much they can spend. They leave if the price is not right. That is strength. Now, let's talk about losses. Losses are part of the market. If you cannot accept losses, you cannot survive. A loss does not mean you are stupid. A loss does not mean the market hates you. A loss does not mean your future is over. A loss is information, but only if it is controlled. A small loss is tuition. A big uncontrolled loss is damage. The dangerous investor keeps losses small. They know small wounds heal. Deep wounds can change everything. This is why risk management matters more than prediction. People love predictions. They want to know where the market will go. Up or down. Bull or bear. Crash or rally. But the better question is, what will I do if I am wrong? Because you will be wrong. Everyone is wrong sometimes. The problem is not being wrong. The problem is being wrong too big. This is one of the most important lessons in the market. You can be wrong many times and still survive if your losses are small. You can be right many times and remember that. One stupid, oversized trade can destroy many smart, small wins. So, the people who scare the market are not people who never lose. They are people who know how to lose properly. That sounds strange, but it is true. Losing properly means losing small, losing with discipline, losing without panic, losing without revenge, losing and learning. That is power. Now, let's talk about independence. A dangerous investor thinks independently. They listen. They learn. They study other opinions. But they do not blindly obey. They do not buy because a stranger online said so. They do not sell because a headline scared them. They do not follow a crowd without knowing why. They take responsibility. This is difficult because responsibility is heavy. It is easier to blame someone else. The broker, the analyst, the influencer, the market, the government, the news, the algorithm. Maybe some of those things matter, but at the end of the day, you clicked buy. You clicked sell. You chose the risk. You chose the position size. You chose to listen. You chose to ignore. That is uncomfortable, but it is also freedom. Because if your actions created the result, your actions can improve the result. Taking responsibility gives you power back. Now, let's talk about simplicity. Many people make investing too complicated. Too many indicators, too many screens, too many strategies, too many opinions, too many alerts. They think complexity means intelligence. But sometimes complexity is just confusion wearing expensive clothes. A strong investor can explain their plan simply. I buy strong companies at reasonable prices. Or, I trade only this setup. Or, I risk only this amount per trade. Or, I invest monthly and ignore noise. Or, I wait for panic and buy quality. Different people have different styles, but the plan must be clear. If you cannot explain your plan simply, you may not have a plan. You may just have a pile of ideas. The market punishes messy thinking. Clean thinking is an advantage. Now, let's talk about the final reason stock exchanges fear these people. They cannot be easily addicted. Addiction is everywhere in trading. The screen, the movement, the profit, the loss, the hope, the dopamine. Every price tick can pull the brain. A weak person needs to check the app every few minutes. A strong person sets a plan and steps away. They do not need constant stimulation. They know the market will still be there tomorrow. This is very important. You do not have to watch every second to be serious. Sometimes watching too much makes you worse. You see every small movement. You feel every small emotion. You start making decisions you did not plan. More watching does not always mean more wisdom. Sometimes it means more noise. A disciplined investor knows when to look and when to live. Because what is the point of making money if the market steals your peace every day? Money is supposed to serve life, not replace it. Now, we are near the end. So let's bring everything together. Why are stock exchanges afraid of these people? Because they are not easy victims. They are not perfect. They are not always right. They do not know the future. But they have something stronger than prediction. They have discipline. They have patience. They have questions. They have risk control. They have humility. They have records. They have a process. They have emotional control. They have a reason bigger than excitement. They are not there to gamble. They are there to grow. Slowly, carefully, seriously. And that changes everything. The market can still hurt them. Of course, nobody is untouchable, but it cannot control them so easily. It cannot scare them every time prices fall. It cannot seduce them with every trend. It cannot destroy them with one headline. It cannot make them chase every candle. It cannot trap them with every rumor, because they have built something inside. A calm center. A set of rules, a strong mind, and a person with a strong mind is always dangerous in a world built on emotional reactions. So, if you are new to the market, remember this. Do not try to become rich fast. Try to become hard to fool. That is better. Do not try to catch every move. try to protect your capital. Do not try to prove you are smart. Try to build a process. Do not follow the crowd blindly. Learn to think. Do not let fear drive you. Do not let greed blind you. Do not let one bad day break you. Do not let one good day make you arrogant. The market is a long road. Walk it carefully. Walk it with humility. Walk it with patience. Walk it with eyes open. And one day, you may become one of those people. The calm ones, the patient ones, the disciplined ones, the ones who do not shake easily, the ones who know when to move and when to wait, the ones who understand that money is not won only on the screen. It is won in the mind first, before the trade, before the click, before the profit, before the loss. The real battle begins inside you. And if you can win there, the market becomes a different place. Not easy, never easy, but clearer, less noisy, less frightening, more understandable. You stop being a person who reacts. You become a person who chooses. And that is the moment everything changes. If you found value in this episode, subscribe to the channel. Do it now. Not later. Not tomorrow. Now. Hit subscribe. Turn on the bell. Stay with us. Learn one idea at a time. Protect your money. Protect your mind. And remember this, the market does not fear people who want money. It fears people who understand themselves. Thank you for listening. Stay calm. Stay patient. Stay disciplined. And I will see you in the next episode.